Good evening, everyone. I'm delighted to welcome you all to today's session. As the exams are fast approaching, we thought it would be helpful to kick off our revision series for all of you. So today we have CA Parvati ma'am to discuss some important questions and amendments which regarding expected in indirect tax paper. So without further delay, I would like to invite ma'am to take over and start today's class. I'm sure you will find it insightful and valuable. Thank you, and over to you, ma'am.
Yes, so good evening all. Good evening all. Can I get a response? Am I audible? Could you please type in the chat box? Am I audible? Yes, okay, right. So please keep typing in the chat box so that I know that I'm audible. You're all there with me.
Good evening.
Yeah, okay. Great. Okay. So today we are covering the amendments which are applicable for our May 2026 exam. So only the amendments which are applicable for our May 2026 exam. And I know you're all very, a bit excited. I don't know what to say, excited or maybe whatever it is. Yes. So don't worry. We have very few amendments which are applicable for May 26 exams. Very few, which can be easily understood. So without further delay, let's start. Let's straight away start with the first amendment. Okay. So we'll first do it chapter wise. So first we'll cover the amendments which are applicable in the chapter of charge of GST. Charge of GST. Okay. So before going into the amendments, let me just tell you what was the chapter, what was it which we learned in our chapter charge of GST. So we learned section 9 and section 10 in charge of GST chapter, correct? Section 9 and section 10. Okay, section 10 talks about composition levy. It talks about composition levy. There is absolutely no amendment in section 10. Whatever we have learned in section 10, that still remains the same. There is absolutely no amendment. Okay. In section 9, what did we learn in section 9? Section 9 is a charging section under GST. So GST, how does it operate? There is a supplier. He supplies something to a recipient. He supplies goods or services to a recipient. So let us take an example. If he is supplying goods worth 1 lakh, yes, he will charge GST. He will collect amount including GST from the recipient, and the supplier will pay GST to the government. Yes. So we call this forward charge mechanism. This is how GST usually works. That is why we call GST an indirect tax. So government is indirectly collecting this tax from the recipient. Who is paying the tax to the government? Supplier. From whom is the supplier collecting that tax? Recipient. So that means government is indirectly collecting the tax from the recipient. And this is called forward charge mechanism. Okay. In section 9, we also have another type of levy. Section 9, 3 and 4 basically. What does it say? In certain cases, again there is a supplier, there is a recipient. But in this case, if it is covered under section 9.3, then the recipient will only pay 1 lakh to the supplier and recipient will directly pay 18,000 to the government. And we call this method reverse charge mechanism. Yes, we call this reverse charge mechanism. What does it mean? The recipient is paying the tax directly to the government. It's called reverse charge mechanism. Okay. So there is absolutely no amendment in section 9.3 also. Okay, 9.4, I'm not talking about it because it is not applicable for CA Inter. So 9.3, there is absolutely no amendment. Okay. Now comes the next section, section 9.5. What does it say? Yes, in certain cases, if there are certain supplies which are made through an e-commerce operator, yes, that it is made through an e-commerce operator. There is a supplier. Yes. So we have a typical example which we always take. What is it? There is an auto driver. Yes, there is an auto driver. He is supplying services. What service is it? Transportation of passengers by road through Uber. So Uber becomes the e-commerce operator and we are the recipient. So basically we are booking an auto through Uber. Yes. So this is transportation of passenger services provided through an e-commerce operator. Yes. So there are certain services which are covered under section 9.5 on which the tax should be paid to the government by the e-commerce operator. So we cannot call this forward charge mechanism. Why? Because forward charge mechanism means suppliers pays tax to the government. Reverse charge mechanism means recipients pay tax to the government. This is e-commerce operator paying tax to the government, meaning e-commerce operator is neither the supplier nor the recipient. So we call it 9-5. Yes, eco is liable to pay GST to the government. And we already had 4 services which are covered under 9-5. 4 services, okay? Is that an amendment? No, we already had 4 services which are covered under 9-5. Let's look at those 4 services. What were they? That is already there. That was already there. The first one was services by way of transportation of passengers by road through an e-commerce operator. Yeah, in that case, e-commerce operator is liable to pay GST. Also, if the transportation of passengers by road is by an omnibus, then if the actual supplier is a company, company will pay under 9-1. If the actual supplier is other than a company, do you remember Kalada Travels? Kalada Travels is providing a service through Redbus. Redbus becomes the e-commerce operator. If the actual supplier is a company, company will pay under 9-1. If the actual supplier is other than a company, then ECO will pay under 9-5. Is this an amendment? No, it is not an amendment. Yes, that was the first service. Next is accommodation services. What did we learn in accommodation services? If the actual supplier means hotel, if the actual supplier hotel is registered, we are booking hotel room through Make My Trip. Yes, so hotel is providing accommodation services through an e-commerce operator to the recipient. What did we learn in this? If this actual supplier is registered, the hotel will pay under 9-1. Means what? Forward charge mechanism. If the actual supplier hotel is an unregistered person, again we are booking through Make My Trip and we are the recipient. In this case, Make My Trip will pay GST under section 9-5. So irrespective of whether the supplier or the e-commerce operator is paying tax to the government, from whom is this GST being collected? It is collected from the recipient. So here we are merely telling about who is liable to pay GST to the government. So if the actual supplier is registered, in case of accommodation services, the actual supplier is liable to pay GST to the government. If the actual supplier is unregistered, then e-commerce operator is liable to pay tax under section 9-5. So this is also not an amendment. Next is housekeeping services. Housekeeping services also same rule applies. Next is restaurant services. What was the rule that we learned in restaurant services? Yes, so example we take Swiggy. There is a restaurant. Yes, Hotel Bharat. Hotel Bharat. Okay. We are booking food. We are ordering food from Bharat through Swiggy. Through Swiggy. Yes. So here, restaurant services supplied through an e-commerce operator. Who will pay tax to the government? So we learned in all cases, Swiggy will pay tax to the government except in one situation. What was it? One situation? If the actual supplier, that is a restaurant, has lodging facility plus restaurant facility in that premises and the room rent of at least one room in that premise is more than 7,500 per night. In that case alone, the supplier will pay tax under 9-1. In all other cases, the Swiggy will pay tax under 9-5. So are there any amendments so far? There are absolutely no amendments so far. Now next is the newly added services. So till now, we had only 4 services which were covered under 9-5. Now we have a new service which is covered under 9-5. What is that new service? Okay, the next service is local delivery service. Okay, so what is local delivery services? Let us understand that. Have you heard of porter? Porter. Can I get a reply in the chat box? Porter. Porter. Porter app. Yes, you've heard of porter, right? Suppose I want to deliver some goods from one location to the other location. What do? Either I can physically go there and collect the goods, or I can ask some GTA or some individual truck people to get the goods from that location to this location. Or now I have a new strategy. I have a new thing that I can do. What is it? I can book through Porter app. Okay, I can book through Porter app, and there will be some person who will be coming in his bike or truck or whatever it is, and he will collect the goods from one location and deliver it to the second location, for which I will be paying him some amount. Yes. So what is happening here? Here, local delivery services are supplied through an e-commerce operator. See, local delivery services are supplied through an e-commerce operator to me. Now, this is a new service which has been added in 9.5. What are they saying now? If local delivery services are supplied through an e-commerce operator, if the actual supplier is registered, in this case, what if this person who comes in that bike or truck or whatever it is, if he is a registered person, then he will have to pay tax under section 9(1). If he is an unregistered person, then porter will have to pay tax under 9(5). So this rule is similar to accommodation services, and housekeeping services. Similar rule is applicable, but now we have a new service, which is local delivery services supplied through an e-commerce operator. So now this is the first amendment which you are looking into. What is the amendment? The first amendment is in section 9(5). What was section 9(5)? Section 9(5) talks about situations where e-commerce operator is liable to pay GST to government. E-commerce operator is liable to pay GST to government. Yes, earlier we had 4 services which were covered under 9(5). Now we have one additional service which is covered under 9(5), and that service is local delivery service. Local delivery service. What is the rule here? If the actual supplier is an unregistered person, he is supplying local delivery services through an e-commerce operator, then ECO will pay under 9(5). If the actual supplier is a registered person and he is supplying local delivery services through an e-commerce operator, then the actual supplier will pay under 9(1). Yes, the rule is similar to accommodation services and housekeeping services, but this is literally a new service which has been added in 9(5). Are we all clear? All porters, all railway porter is not an e-commerce operator, right? That is not covered under e-commerce operator. We are only talking about services which are supplied through an e-commerce operator. Only services which are supplied through an e-commerce operator. Because only if that service is supplied through an e-commerce operator can we ask the e-commerce operator to pay GST. In other cases, we cannot ask e-commerce operator to pay GST. So there should be an ECO who is involved in this transaction. Are we clear? Are we clear? Yes, yes. So that is the first amendment. Yes, section 9(5), very, very important from exam point of view. I think this is a very, very important amendment from exam point of view. Okay. Now we'll go to the next amendment. This is not an amendment which is applicable for May 26. It is already covered under Jan 26 amendment. Anyway, let's look at what it is. Yes, it says Delhi Development Authority is not a local authority. Now let's understand why was this amendment or why was this clarification required? Okay. So in RCM, we had learned that if government is providing some services other than renting of immobile property services and some notified services like Department of Post, services in relation to aircraft or vessel, transportation of goods or passengers, Indian Railways. Yes, other than these services, if services are supplied by government to a big business entity where the consideration charged is more than 5,000 per annum, then in that case, big business entity is liable to pay tax under RCM, which we have already learned in 9(3). The question was, if Delhi Development Authority is providing any services, is it treated as government here? That is, if they provide any services, will that service get covered under RCM? Now they have said Delhi Development Authority is not a local authority. You cannot treat Delhi Development Authority as government. So therefore, if Delhi Development Authority is providing any services, it is not government. It is not government. Therefore, 9(1) is applicable, 9(3). RCM is never applicable. Yes, it is already covered in Jan 26. I've just mentioned it once more because it is there in your May 26 amendment booklet. Yes, it is already there. It was already there in your Jan 26 amendment booklet. Okay. Now the next amendment. Okay, next amendment here again. GTS services and renting of motor vehicle services. Here again, it is very, very simple. Okay, don't take amendment. I mean, don't think that amendment is very difficult. It is very, very easy. Okay, so let's look at the amendment which is applicable in our charge of GST, RCM. Okay, now let's just take the GTA services. Okay, okay, what did we learn in GTA services? Yes, in GTA services, we learned that what is GTA? Transportation of goods by road. A person who is supplying transportation of goods by road service, he is called a GTA. By issuing a consignment note, he is called a GTA. Yes, in case of GTA services, if the recipient is a specified recipient, then the recipient is able to pay tax under RCM. Who are the specified recipient? A factory registered under Factories Act, a society registered under Societies Registration Act, cooperative society, body corporate, partnership firm, LLP, OP, registered person, or a registered CTP. In all these cases, if the recipient is a specified recipient, RCM is not RCM is applicable. If GTA wants, he can opt for FCM. In that case, all these RCM will become FCM. Okay. So is this an amendment? No, we have already learned this in our RCM chapter. Now, what is the amendment? Okay. In GTA services, the rate of tax which is applicable for RCM is always 5%. There is no difference. Even now, it's always 5%. But if GTA wants, they can opt for FCM. What if GTA opts for FCM? What is the rate of GST? We learned that there are two rates. If GTA wants, they can opt for 5%. If they opt for 5%, then they cannot claim ITC on their inward supply. But if they opt for 12%, they can claim ITC on their inward supply. Now, the only amendment is this 12% has been made 18%. Okay, 18% with ITC, because after our September 2025 GST 2.0, yes, with that we don't have a rate of 12% for GST. We only have 18% or 5%. So wherever you see 12%, now you'll have to make it 18%. So here it is either 18% with ITC or 5% without ITC. That is the only amendment, no other amendment. Is it clear? Is this amendment clear? Yes. So GTA GST rate in FCM is either 5% or 18%. So what about in RCM? Absolutely no change. RCM means always 5%. It's always 5%. Now we'll go to the next amendment. What is it? Renting of motor vehicle services. Okay. So what are the amendments what have come in renting of motor vehicle services? Here again, it's a very simple amendment. Let's look at renting of motor vehicle services. Okay. Renting of motor vehicle services. Here we learned renting of motor vehicle service. When is it covered under RCM? If the supplier is any person other than a body corporate who does not issue an invoice charging GST at 12%. Now that 12% has become 18%. Only amendment. Yes. So when is RCM applicable? If the supplier is any person other than a body corporate who does not issue an invoice charging GST at 18%, the 12% has been replaced with 18%, and it is provided to a body corporate. In that case, RCM is applicable. So here again, renting of motor vehicle services means if it is 18%, it is always FCM. If it is 5%, it depends. Yes, if the recipient is a body corporate, then it will be RCM. Yes, if the recipient is not a body corporate, then it will be FC. So here the only amendment is this 12% has been made 18%. Are we clear with these two amendments, rate amendments? Yes. So till now I've taught you 3 amendments. Okay, in our charge of GST chapter. What are the 3 amendments? Amendment number 1. In 9.5, we have one new service which has been added. What was that new service? Local delivery service. Okay, the new service which has been added is local delivery services supplied through an e-commerce operator. When is 9.5 getting triggered in that case? If the actual supplier is an unregistered person and he is supplying local delivery services through an e-commerce operator, then 9.5 is applicable. First amendment. Then in 9.3, yes, in case of GTA service and renting of motor vehicle service, in GTA service, there was an option of 12% GST rate, which has been made 18%. Yes, so now it is 18% or 5% FCM, and RCM continues the same, 5%, because there was never an 18% rate for RCM in case of GTA services. Now, what about renting of motor vehicle service? Renting of motor vehicle service also, it was either 12% or 5%. Now it has been made 18% or 5%. Are we clear with this? Are we all clear? These 2 amendments? Yes? Okay. So that is all with our chapter of charge of GST. Now we'll go to the returns chapter. Okay. Next we'll take a bit more lighter amendment. Next is in the returns chapter. Okay. What does it say? What is the amendment in our returns chapter? So we have every month a normal registered person files 2 returns, which is GSTR1 and GSTR3B. What is GSTR1? Statement of outward supplies. What is the STR3B? A summary return. A summary return. Yes. So every month, a normal registered person files 2 returns. Yes. In addition to filing these returns, if his aggregate turnover for that financial year is greater than 2 crores, he will also have to file an annual return for that financial year in Form GSTR 9. Do you remember this context? Yes. So what is the amendment that we are going to learn here? Is there any amendment here? No, we have already learned this. This is how annual return is applicable. Correct? Section 44, annual return. What does it say? If a person's aggregate turnover in that financial year exceeds 2 crores, then he will also have to file an annual return for that financial year. Okay. Now, what is the amendment here? What happened was from financial year 17-18 onwards, the rule stated that in the law, it was stated that every registered person will have to file an annual return 17-18, 18-19, 19-20, 20-21, 21-22, 22-23, and 23-24. In all these years, it was stated that every normal registered person will have to file an annual return. And then they stated every year they'll come up with a notification. For 17-18, they'll come up with a notification and say, if that person's aggregate turnover for 17-18 is more than 2 crores, then he will have to file an annual return, or else it is not required. Again, in financial year 18-19, again they came up with a notification and said, for financial year 18-19, if a person's aggregate turnover is more than 2 crores, then he will have to file an annual return. In all other cases, he need not file an annual return. Similarly, for all these financial years. Now, in financial year 24-25 onwards, government decided, why should we keep on issuing a notification saying every year aggregate turnover more than 2 crores, file annual return, or else not required? Why should we issue a notification every year? Instead, we will make an amendment in the section itself and say, if your aggregate turnover is more than 2 crores, then only you file annual return, GSTR 9. In all other cases, you need not file annual return. If we bring that provision in the Act itself, we don't have to issue a fresh notification every year. So that was the amendment. Yes, the commissioner has exempted the registered person whose aggregate turnover in any financial year is up to 2 crores from filing annual return. So we already know this provision. Only thing is, every year notification was issued saying that you need not file your annual return if your aggregate turnover is less than 2 crores. Now they have mentioned that in the Act itself. Okay, so they don't have to issue a separate notification telling less than 2 crores, no annual return is required. Is it clear? Is it clear in our returns chapter amendment? So there is no amendment per se. We already know this provision. So it has just been inserted in the Act. Is it clear? Can I get a yes or no? Yes. Okay. Next is in the chapter of input tax credit. Here again, input tax credit. What is the amendment? Okay, now let's take where we have learned input tax credit, this plant or machinery. Do you remember section 17.5, blocked credit? Do you remember 17.5 blocked credit? Yes. In that, we have learned works contract services in relation to an immovable property means ITC is not allowed except if he is engaged in further supply of such works contract service. Also, we have learned if immovable property is plant and machinery, ITC is allowed. Earlier, the wording used was plant or machinery. Now they have made it plant and machinery. For your exam point of view, it doesn't make much of a difference. From legal point of view, from the actual, when you come into practice, when you come into the actual side of GST compliance, then there is a difference between plant or machinery or plant and machinery. But for your exam purposes, all you need to understand is now it is plant and machinery and not plant or machinery. So plant or machinery is now changed to plant and machinery. So that is the only amendment. All other provisions remain the same. Can you claim ITC on plant and machinery? Yes. Earlier it said plant or machinery, you can claim ITC. Now it says plant and machinery, you can claim ITC. No difference. Is it clear? Is it clear? Yes, ITC chapter. Yes, okay. Now we'll go to the exemptions. Very, very important from exam point of view. Very important. Till now we've learned, what is it? This plant and machinery and returns. These are not very important from exam point of view. Okay, exam point of view, even though it is an amendment, from exam point of view, it is not very important because this is already there. This is what we have learned. This was also already there. This is what we have learned. So from exam point of view, it doesn't make any difference. But 9.5, it is important from exam point of view. Very, very important. Okay. Similarly, exemptions from exam point of view, very, very important. What is the amendment in our exemptions chapter? Now they have added a new service which is exempt from GST. Let's see what it is. Okay. What is a new service which has been added in exemption? It says life insurance services. Life insurance services provided by an insurance company to an individual or his family. It is exempt from GST. Come again once more. What is it? If an insurance company provides life insurance services to an individual or an individual plus his family, then that life insurance is exempt from GST. GST is not applicable. Okay. Again, they added one more exemption and said, if an insurance company is providing health insurance, yes, life insurance, do you remember income tax? You would have learned ATC, section ATC, life insurance, yes, deduction, and health insurance. You would have learned ATD, medical insurance, medical premium paid, yes. So similarly, health insurance and life insurance, earlier on such insurance policy, GST was applicable. If you had to pay 10,000 rupees life insurance premium, on that you will also have to pay GST. Now, if you have to pay 10,000 rupees life insurance premium, you just have to pay 10,000 rupees. GST is not applicable on that transaction. It is exempt from GST. Okay. So if an insurance company is providing life insurance or health insurance to an individual or individual plus family, it is exempt from GST. For example, I take a life insurance policy from Axis Insurance or HDFC Life Insurance Company. Now, HDFC Life Insurance Company is providing life insurance services to me. They'll be collecting some premium. Yes, on that, they will not charge GST. It is exempt from GST. Whatever the services they are providing, it is exempt from GST. Okay. Now, I'm taking a life insurance policy on my name as well as my spouse name, husband's name. Yes. So, life insurance services is provided by HDFC to individual, that is me, plus family, my spouse, my husband. Yes, my family. That is also exempt from GST. Similarly, health insurance. In my name and my spouse name, it is exempt from GST. Now, okay, now this is the important point. What does it say? Say, for example, Reliance Limited is taking life insurance for all the employees working for Reliance Limited. Okay, Reliance Limited is taking life insurance policy in the name of all the employees working in Reliance Limited. Now, this company, HDFC, is providing life insurance services, which is called a group insurance. Why? It is not for an individual. It is not for the family of that individual. Rather, it is for a group of people. Yes. So that is called group insurance. If HDFC is providing life insurance, which is a group insurance, then that insurance service becomes taxable. There is no exemption for that. It is taxable. Similarly, if Reliance Limited takes health insurance policy in the name of all the employees working for Reliance Limited, again, if HDFC is providing health insurance to Reliance Limited, that health insurance is also taxable. So that means exemption is applicable only for life insurance services provided to an individual or individual plus family. For example, Mr. X, his spouse, his parents, his children. Yes, so this is family. Family if they provide life insurance or health insurance service, it is exempt. But if it is a group insurance service, then it becomes taxable. So see, insurance companies providing group insurance services, employer to employee. Yes, so that is taxable. Again, say for example, ICI, we can take an insurance policy in the name of all the members of ICI. So ICI has such schemes. So if an insurance company is providing such group insurance to all the members of ICI, then that also becomes taxable. Yes, because it is a group insurance policy. Now, we'll come to this reinsurance. What is reinsurance? Now, let's first understand what is reinsurance. Yes. So, Mr. X and family has taken life insurance services from Axis Insurance Company. So, Axis Insurance Company is providing life insurance or health insurance services to Mr. X. This service is exempt from GST. Okay. Now, let us assume this Mr. X is Ambani. Okay. He has insured his life and his family's life for say 1,000 crores. Okay, for 1,000 crores. Now, Axis Insurance Company does not want to assume so much of risk. What do? They will reinsure that services with another insurance company. Now, HDFC is providing reinsurance services to Axis Insurance Company. Now, since this service is exempt, this reinsurance service is also exempt from GST. Now, what if Axis Insurance Company is providing services to the employees of Reliance Limited? Now, this life insurance is taxable. Therefore, that life insurance, reinsurance, that is also taxable. Did you understand? Yes. So if the main service is exempt, its reinsurance is also exempt. If the main taxable, its reinsurance also becomes taxable. Are we clear? Are we clear? Are we clear? Yes? Okay. Is my screen visible now? Screen is visible? Yes. Okay. So that is our next amendment. So let's see. Services of life insurance. I'll share this amendment booklet if required. I've already shared it in the group. If you want, I'll share it once more. Services of life insurance business provided by an insurer. Who is an insurer? Insurance company. To the insured, where the insured is not a group, is exempt from GST. Yes, because group insurance means it will be taxable. If the insured is not a group, then it is exempt. Similarly, health insurance business is provided by an insurer. Insurer again means insurance company. To the insured, where the insured is not a group. Who is an insured person on whose name the insurance policy is taken? He is called the insured. So if the insured is not a group, then it is exempt. If the insured is a group, then it is taxable. Same provision applicable for reinsurance of above services. Are we clear with this? Yes, so we'll just look at this question. This was a question which is appearing in your RTP for May 26. Let's look at this question. Examine the taxability of supplies in the following independent cases in terms of the relevant provisions of CGST Act. Brief reason should form part of your answer. What is the service? Service of health insurance business provided by Health and Bless Insurance Company to Mr. Krish Kinare and his family. So this is health insurance services provided to individual and his family. So this service is exempt from GST. It is exempt from GST. Are we clear? Are we clear with this amendment? Clear? Okay. Now we'll go to the next amendment in our exemption chapter, GTA services. Okay. So GTA services, what did we learn? Transportation of goods by road. Okay. If it is by individual truck, tempo operators or by bullock cart, it is exempt. If it is through GTA, who is a GTA? Person who undertakes transportation of goods by road by issuing a consignment note. He's called a GTA. If GTA is providing services to specified recipients, then it is taxable under RCM. If not, it is exempt from GST. Do you remember this chart? I just showed you this chart. Yes, to specified recipient means it is taxable under RCM. To others, unregistered individual or HUF, except to government TDS registered person, except. Yes, so there is no amendment in that. Then what is the amendment here? It says, now they have said, if transportation of goods by road is through local delivery services supplied through e-commerce operator, then that will be taxable. There is no exception. Yes. So transportation of goods by road. Now we have a new limb to it. That new limb says in case of local delivery services supplied through e-commerce operator, it is always taxable. You cannot claim exemption for that. Okay. So you can just add this transportation of goods by road. Local delivery services supplied through e-commerce operator service is always taxable. So that was their amendment. Okay. So because GTA does not include an electronic commerce operator through whom local delivery services are provided. By whom or through whom a local delivery services are provided. So that means local delivery services always taxable. Who will pay GST? If the actual supplier is registered, he will pay under 9(1). If the actual supplier is unregistered, then e-commerce operator will pay under 9(5). Okay. So that is our exemption chapter mein next amendment. So this is what I just told. Transportation of goods by road, local delivery services are always taxable. Exemption will not apply to local delivery services. So that's all about exemption chapter. So exemption chapter, how many amendments did we cover? Life insurance, health insurance, then GTA, local delivery services. Clear? Yes? GTA, local delivery services. GTA means it's transportation of goods by road. GTA does not include local delivery services. Means local delivery services are always taxable. There is no exemption. So local delivery services, life insurance, health insurance. That's all. Okay, so that is our amendment in exemption chapter. Okay, exemption chapter is over. Charge of GST chapter is no over. Now we'll come to supply chapter. Okay, just pay attention. Supply chapter will get over in another 10 to 15 minutes. So what are the amendments which are applicable in our supply chapter? Okay, so this is basically an RBI circular. What does the RBI circular say? Do you remember something we've learned about vouchers? Okay, where did we learn this? We learned time of supply of vouchers. Yes, time of supply. What was voucher? Suppose I go to Crossword, I pay 10,000 rupees, I get a voucher from them. What does it mean? It means, say for example, 1 year, within a period of 1 year, if somebody goes to that shop, Crossword, with this voucher and they buy something from that shop, instead of paying money, they can use this voucher to settle their obligation. Correct? Do you remember this voucher? In fact, we learned in section 12.4, time of supply of vouchers. If the supply is identifiable at the time of issue of voucher, the time of supply will be date of issue of voucher. If the supply is not identifiable at the time of issue of voucher, then the time of supply will be date of redemption of voucher. Okay. What is all this? I'll just show you. Where did we learn this? See, time of supply of vouchers. What did we learn? If the supply is identifiable, the time of supply will be date of issue. If the supply is not identifiable, the time of supply will be date of redemption. Okay. So it's something which we are going to learn about these vouchers. Okay. So it is an amendment in our supply chapter. It's basically an RBI circular. So we have to comply with that provision. There is no other option. What does it say? They said, if you pay amount and buy voucher, it's called a prepaid instrument. What is it? You pay some amount. You go to Kalyan Silks, pay 10,000 rupees, you get their voucher. Yes. So it is a prepaid. That voucher is called a prepaid instrument. You've already paid in advance to get that voucher. It's a prepaid insurance instrument. That prepaid instrument is nothing but money. It should be considered as money. Yes. So what is a prepaid instrument? It should be considered as money. So on money, do we charge GST? No, because to charge GST, it should either be goods or services. Money is not covered under the definition of goods. Money is not covered under the definition of services. So that means if somebody sells prepaid instrument, Kalyan Silks is selling that voucher, collecting 10,000 rupees, selling that voucher. It means they are giving money. If they give money, is GST applicable? No. So that means that is excluded from the definition of goods or services. Therefore, no GST is applicable. Okay, so if no GST is applicable, why do we have to learn time of supply? So they said, therefore, section 12.4 and 13.4, if you sell voucher, you don't have to pay GST means, then why do you have to find time of supply? Time of supply provision is also not required. So they just deleted this 12.4 and 13.4 because if you supply voucher, there is no supply. Okay, so what does it say? How can that happen? Is that right? So what did they say? If somebody sells prepaid instrument, that is money, voucher, it should not be considered as supply. But later on, when a person goes to Kalyan Silks, yes, he buys clothes and he gives voucher. He gives voucher which he already purchased earlier. Yes. So in this case, here there is a supply. When Kalyan Silk supplies cloth, that time there is a supply. But initially, when Kalyan Silks gave voucher and collected 10,000 rupees, this voucher is nothing but money. This is basically a transaction money. No GST is applicable. But later on, when this person goes with the voucher to Kalyan Silks, buy something, that time supply takes place and that time GST is applicable. Are we clear? Yes. So prepaid instrument is nothing but money. Therefore, GST is no GST. GST is not applicable. Now, what if it is not a prepaid instrument? I purchased some electronic items worth rupees 10,000 rupees. That time I got a voucher for 500 rupees. I got a voucher for 500 rupees. They said within 6 months, if you come to our shop and buy something worth 5,000 rupees or above, you can use this 500 rupees voucher to mean, you don't have to pay that full 5,000 rupees. Next time when you come, 5,000 rupees, you buy something, you don't have to pay 5,000 rupees. You will only have to pay 4,500 rupees. Now, what about this voucher? This is not a prepaid instrument because we did not pay any amount to get this instrument. So they said this is not a prepaid instrument, but it should be treated as an actionable claim. Yes, actionable claim is covered under the definition of goods. So is GST applicable on this type of voucher? They said actionable claims is taxable under GST only if it is a specified actionable claim. What is a specified actionable claim? Lottery, betting, gambling, casinos, horse racing, online money gaming. Yes, only these are specified actionable claims. The other actionable claims again is out of GST. So that means whether it is prepaid instrument or not a prepaid instrument, as long as it is a voucher, no GST is applicable. But if there is a transaction of underlying goods or services, means there is redemption of voucher. At that time, supply happens and that time GST is applicable. If the transaction is in voucher, it is not a supply, no GST. But there is a transaction of underlying goods or services, that is the voucher is redeemed. At that point of time, GST is applicable. So now let's look at this example. Mr. X pays 1,000 rupees to Amazon and gets a voucher. Is GST applicable? No, because it's a prepaid instrument, means money. Amazon gave money. It's a transaction in money. Amazon received money, Amazon gave money. It's a transaction in money, therefore no GST. Now, Amazon gives gift voucher to Mr. X. It's a prepaid instrument, therefore it is a money, no GST. Mr. X gifts this voucher to another person. Mr. X is gifting that voucher to another person. Again, no GST. Now, that another person bought goods using this voucher. Now there is a supply of goods happening, and on that supply of goods, GST will be applicable. So that means GST applies, GST applies at the time of redemption of voucher. So at the time of issuing the voucher, there is no GST. GST is applicable only at the time of redemption of voucher. Now another question came up. What if I paid 10,000 rupees? Yes, I paid 10,000 rupees and I got a voucher. I paid 10,000 rupees and I got a voucher. You said there is no GST. It is not supply, therefore there is no GST. No supply, no GST. Yes. So that means within a period of 1 year, I can go to that shop and buy some product worth 10,000 rupees. But I did not buy that product. 1 year expired. Voucher expired. Now I cannot use that voucher to buy anything. Now, so basically Kalyan Silks is having this 10,000 rupees with them. Did they supply something? No. So what about if the voucher is not redeemed at all? Yes. So then in that case, it is called breakage. Breakage. So here government has clarified that in case of breakage, just think, is there supply happening? No, there is no supply. Did Kalyan Silk supply something? No, there is no supply. Therefore, on breakage, GST is not applicable. So simple under. You remember, if goods or services are supplied, then only GST is applicable. First, they said in case of voucher, if it is money, it is not goods, it is not service. GST is not applicable. Now, then they said you got a voucher. Only when you redeem, supply is happening. You did not redeem. Redemption did not happen and the voucher has expired. Now, what if that money is still retained by that supplier? We cannot call him supplier because he did not supply anything, but that money is retained by Kalyan Sales. On that 10,000 rupees, GST will not be applicable even then. Why? Because supply did not happen. If goods or services are supplied, then only GST is applicable. So first of all, it should be goods or services. Second, it should be supplied. So in this case, in both cases, GST is not applicable. I hope it is clear. Is it clear? Is it clear? Voucher. Yes. So voucher means you pay some amount, you get voucher. What is it? Money, no GST. Now, you use that voucher, you buy something. In that case, is GST applicable? Yes, because there is a supply of goods or service which is happening. That's all. Okay. Now, voucher is not over. I have some more things to add in voucher. So what is the next thing? Okay. There is a distributor. There is a distributor. Okay. And there is a manufacturer. It's just a company. Okay. What is this company doing? The company is selling voucher to this distributor, and we can buy vouchers of this company. Let us assume and take an example, H&M. Okay. If you want, you don't have to go to H&M to buy their vouchers. They have their distributors at various places. If you want vouchers of H&M, you can just go to the distributor, pay 10,000 rupees and get the vouchers of H&M. So what is this distributor doing? They are buying and selling vouchers. They are buying and selling vouchers. This type of transaction is called principal to principal transaction. What does it mean? Person is supplying voucher to another person. That person is again supplying voucher to another person. What will happen here? Say for example, 1000 rupees voucher. This distributor will get the 1000 rupees voucher for 950 rupees. 950 rupees. He'll have to pay only 950 rupees. And he will sell that voucher for 1000 rupees because the voucher is worth 1000 rupees. Yes. So 50 rupees, that is a margin for distributor. 50 rupees is a margin for distributor. Or you can say profit. Distributor's profit. On this 50 rupees, distributor will have to pay income tax. But what I'm asking is, on this supply, on in this supply, is GST is applicable? Is GST applicable? No. Why? Because here it is money. Here again it is money. Money GST is not applicable. So in this mere buying and selling vouchers, GST is not applicable because voucher becomes money. On money, GST is not applicable. Okay. Now we'll go to the next situation. What is the next situation? Okay. Next situation is H&M appoints a distributor. Now H&M says, you go get some customers for me. You don't have to sell the vouchers. I will sell them the vouchers. You only go and get me some customers. Here, this transaction, H&M to distributor, this transaction is principal to agent transaction. What does it mean? Is distributor buying vouchers from H&M? No. He's only getting customers for H&M. So here, this distributor is only an agent of H&M. Now, what will happen in this case? In this case, they said, when customer comes to buy that voucher, who is supplying the voucher? Who is supplying the voucher? H&M. Is this a supply? No, GST is not applicable because it is money. Okay. Now, what will distributor get? Distributor will get commission for this. For getting these customers and helping H&M sell their vouchers, distributor will get commission. On that commission, is GST is applicable? Yes, GST is applicable. So this was the clarification here. Transaction vouchers by distributors, sub-distributors, dealers or agents. What does it say? If it is principal to principal transaction, our first case, buying and selling vouchers, no GST is applicable on trading of voucher because voucher is money. Okay. In case of principal to agent sale, our second case. In our second case, GST is applicable on commission because commission is not money, right? Commission is like it is a consideration for the services provided by agent to principal. So on that commission, GST is applicable. Are we clear? Are we clear? So let's just summarize. What does it say? Vouchers, either money or either prepaid instrument or not a prepaid instrument. Prepaid instruments means money, no GST. Not a prepaid instrument means actionable claim. Actionable claim also there is no GST as per Schedule 3 because only if there are specified actionable claims that there is GST is applicable. Okay. Now, if it is prepaid instrument, on redemption GST is applicable because there is a supply happening. But if there is breakage, breakage means what? Breakage means what? Voucher is not redeemed. Voucher is not redeemed. Voucher is not redeemed means supply is not happening. Therefore, GST is not happening. Okay. Voucher distributors. What does it happen? Trading in vouchers. Principal to principal. Voucher again. Buying, selling voucher, not a supply. Now, trading in voucher, principal to agent transaction means agent gets commission. In that case, it is a supply and GST is applicable. Are we clear? So, in this one page, we have summarized this entire thing relating to vouchers. Are we clear? Just go through this one page. Is it clear? A voucher means what? Voucher means money. If you pay some amount, get voucher, it is money. On money, what GST? No GST is applicable. For GST to be applicable, it should first of all be goods or services. Second of all, it should be supplied. Okay. So next, unredeemed vouchers, it is breakage. Is GST applicable? No. Why no GST? No supply has happened. There is no supply, what GST? Because GST is tax on supply of goods or services. If there is no supply, there is no GST. Next, now what if additional services are provided? What does it mean? Say for example, there is a principal, there is a company H&M. Same example, H&M. H&M has sold vouchers to their dealer, who in turn is selling the voucher to customers. We said here also there is no GST. Here also there is no GST. Dealer will earn some margin profit. On that he will have to pay income tax, but there is no GST applicable. Now the next question was, now H&M told the dealer that in your whatever in your shop, you please put an advertisement, okay, saying H&M stores. Okay, put an advertisement. Okay, so dealer said, why would I put an advertisement? Why would I put your advertisement? What will I get in return? So H&M said, we will pay you 1 lakh rupees for the advertisement services that you are giving to us. Now, if advertisement or co-branding or any additional services is provided by the dealer or distributor, then on that GST is applicable because it is a supply of service. So only buying and selling voucher GST is not applicable. But in addition to buying and selling voucher, if dealer is providing any other services, extra services for which he is getting consideration from that company, on that extra services supplied, GST is applicable. Are we clear? Are we clear? Yes. So since on vouchers there is no GST. If GST is not applicable, then why should we find out time of supply? So they said, since on vouchers GST is not applicable, you don't have to find out time of supply also. So section 12.4 and 13.4 has been deleted from that. You don't have to spend time learning 12.4 and 13.4. It is deleted from that. What was 12.4? Time of supply of goods, vouchers. Vouchers are being sold, which can be used for purchase of goods. 13.4, what is 13.4? Time of supply of services, vouchers. Vouchers are being sold to avail a service. That case, that is also voucher. So in both cases, GST is not applicable. Therefore, this time of supply provision has also been deleted. Are we clear? Are we clear? If any additional services are provided, yes, Ananya, if any additional services are provided on that supply alone, that additional services, in our case, in our example, what did this dealer do? What did this dealer do? This is one service. Now, next service, dealer provided advertisement services to H&M, for which H&M paid 1 lakh rupees consideration. On this 1 lakh, GST is applicable because dealer is providing advertisement services. That service GST is applicable. Vouchers GST is not applicable, but for other service, GST is applicable. Okay. Okay, so that is our next amendment in supply chapter. So supply chapter, what was the amendment that we learned? We learned vouchers, no GST, because voucher is either money or actionable claim. In both cases, GST is not applicable. Okay. Next, vouchers redeemed. In that case, GST is applicable. Why? Because there is a supply happening. On that supply, GST is applicable. Next, vouchers expired. Expired means it was not redeemed. Time is also over. For that we call it breakage. For breakage also, no GST. Why? Because there is no supply happening. Voucher redeemed, why was there GST? Because on supply, GST is applicable. Because there is a supply which is happening. So on that supply, GST is happening. Clear? Clear? Are we clear? Vouchers, are we clear? Supply chapter? Yes. Okay. So that is our amendment in supply chapter. So supply is over. Exemption. Now we'll come to the last amendment. With that, we have completed amendment. That's very important. Okay. Value of supply. You have to be very careful with this amendment because you have to remember certain points from what we have already learned. Only then you will be able to link this amendment. Okay. The last amendment in our value of supply chapter. Okay. So before I start with this amendment, we'll just understand. Okay. Why did we learn value of supply? Because we know that GST is an Ad valorem tax means it is a rate, 18%, 5%, etc. This rate has to be applied on some value. On some value. How do you compute the value on which this GST rate is applied? So for that, we have a we have a provision of value of supply. Yes, section 15. Section 15. What does it say? Section 15 says, if the supply is between unrelated person and price is the sole consideration, then you can take transaction value. That is the price actually paid or payable. 15.2 says, in addition to that, you have to add certain thing like incidental expenses, etc. If you're charging extra money from the customer, that also you have to add to your value of supply. Okay, no amendment in this. Next, in these two, there are no amendments. Absolutely same. Whatever we have learned is same. Next is discount. Okay, discount. What did we learn in discount? In discount, we learned either it can be discount recorded in the tax invoice. What does it mean? You go to MyG. MyG is supplying you a mobile phone for 1 lakh rupees. They said, now we have an offer. If you buy mobile phone from us now, we will give you a discount of 5,000 rupees. Means you will have to pay only 95,000 rupees. This is a discount which is recorded in the tax invoice. Can MyG reduce the discount and compute GST on 95,000 rupees? Yes, this is allowed because discount recorded in the tax invoice can be reduced to compute value of supply. So in this case, what is our value of supply? 95,000. So GST is applicable on 95,000. Okay, no amendment there also. Now, 15.3b. What does it say? Post supply discount. Okay, what is post supply discount? Here, MyG is supplying television to, let us assume, tell me some, we'll say QRS, okay? QRS retail. MyG is supplying television to QRS, okay? What is happening here? MyG said, we will supply you televisions worth 1 lakh rupees. 1 lakh rupees television. If you want, you will buy 10 numbers from us, 100 numbers from us, whatever you want. And then MyG said, if you buy more than 100 numbers of television from us during this financial year, we will give you a discount of 10%. Now, when MyG is selling the first lot of television, first lot, QRS is ordered for 10 televisions. So 1 lakh into 10. 1 lakh into 10 televisions. 10 lakh plus GST they will charge. Okay. Now, is QRS entitled to discount now? No, they're not entitled to discount because what is the agreement between them? If there is supply of more than 100 television, then they will give you a discount of 10%. That is the agreement. As of now, only 10 televisions are purchased. So this year is not yet over. So in future, they may be entitled to 10% discount. We don't know what it is. So this type of discount is called post supply discount. So let us assume QRS purchased 100 televisions from MyG. Throughout the year, it purchased 100 televisions from MyG. What will happen here? Tax invoice on various dates would have been issued for 100 television into 1 lakh each, 100 lakhs plus GST on 100 lakhs, correct? 118 lakhs. This is not one tax invoice, 1, 2, 3, various tax invoice totaling to 100 lakh. Now what happened? Since QRS has purchased more than 100 televisions, 100 televisions or more, okay, more greater than or equal to, I'll write 100 televisions from MyG. Now, MyG will have to give a discount. How will MyG give a discount? MyG will issue a credit note. Yes, to reduce the value, MyG will issue a credit note. How will the credit note be issued? Now we know that 10% should be the discount which is given. So 100 lakhs into 10%, correct? So 10 lakh they are going to give discount. On that GST, how much? 1.8 lakhs. So 11.8 lakhs will be the net credit note value. So what does it mean? What does it mean here? It means, what does it mean? MyG, they already paid GST on 100 lakhs, 18 lakhs. Now, on 10 lakhs, they are reducing their GST liability. So what is the net GST that they are paying to the government? 16.2 lakhs. Similarly, QRS, when they received the invoice, they would have claimed 18 lakh rupees as ITC. Now that MyG is reducing their liability, in order to allow MyG to reduce their liability, QRS also should reduce their ITC and claim only 16.2 lakh as ITC. Only then this will match, because supplier's output tax liability is recipient's ITC. So whatever supplier is paying to the government should be the amount which recipient is claiming ITC. He cannot claim higher ITC. Yes or no? Yes or no? Are you understanding this much? Have you all understood this much? Can I get a response? Okay. Okay. So this is where this is not an amendment. This is a clarification. Okay. This is a clarification. What does this clarification say? Let's understand. Okay. So ഇതിനകത്ത് പറഞ്ഞു, in case of post supply discount, if the supplier has to issue a GST credit note to reduce his liability, then he will have to satisfy 3 conditions. Only then he can reduce this post supply discount. First condition is there should be an agreement before or at the time of supply. Second, it should be linked to invoice. Third, proportionate ITC should be reversed by the recipient. Do you remember these provisions? Yes, which we have learned in our value of supply chapter. We'll see. Where did we learn in our value of supply chapter? Yes, post supply discount means if there is an agreement before or at the time of supply linked to invoice and proportionate ITC should be reversed by the recipient, then it can be reduced. The supplier will issue a credit note. Okay, this clarification is with regard to that context. Now what happened is supplier is issuing a GST credit note. Means what? His output tax liability has reduced. Yes or no? So that means what? The recipient should also reverse his ITC. Take this example. What happened here? Supplier, MyG, has issued a credit note. When MyG issued a credit note, what happened? 1.8 lakhs of liability on that credit note also he reduced. So MyG has reduced his output tax liability, means QRS should also reduce his input tax credit. That's all. See? GST credit note, if supplier issues, supplier can reduce his output tax liability, but recipient should also reverse his ITC. Only then supplier can reduce his output tax liability. Are we clear? Okay. Now what happens if supplier issues a financial credit note, or we can call it a commercial credit note? Both means the same. Okay. What kind of credit note is that? Here in our case, MyG has raised an invoice for how much amount? 100 televisions into 1 lakh, 100 lakh. Okay. GST 18 lakh. Total 118 lakh. Okay. Now QRS is asking for discount. There is no prior agreement between MyG and QRS saying that if you buy 100 televisions or more, we will give you a discount. There is no such agreement. Now, but QRS wants a discount. So MyG said, since we don't have a prior agreement, I cannot issue a GST credit note to you. I can only issue a commercial credit note. Means GST law cannot say you should not give discount. Law can only say that if you want to give discount, you give discount. But no, don't reduce your liability. GST liability you should not reduce. That is the only thing that GST law can say. So what happens here is, since the supplier cannot issue a GST credit note. Why can't he issue a GST credit note? Because there was no agreement at the time of supply. What will the supplier issue? He will simply issue a financial or commercial credit note for 10 lakh rupees. Is there GST on this? No. 10 lakh commercial credit note. What will happen here? How much tax did MyG, that is supplier, pay to the government? 18 lakhs. Why? Because there is nothing to reduce here. There is no GST on that credit note. So he cannot reduce. So therefore 18 lakhs he paid. Now, how much ITC did QRS claim? 18 lakh. This invoice. This is not just one invoice, 1, 2, 3, 4, how much ever invoice it is, totaling to 18 lakhs. 18 lakh claim, credit QRS also claim. Now, if MyG issues a commercial credit note, should QRS reduce their ITC? That is a question. So now let's understand the first circular. Okay, this is a circular on various doubts regarding treatment of secondary or post-supply discounts under GST. We'll do the first issue. We'll go through the first issue. What is the first issue? Whether full input tax credit is available to the recipient. In our case, the recipient is QRS, recipient of supply. When the recipient makes discounted payments to the supplier, in our case, supplier is MyG, on account of financial or commercial credit notes issued by the supplier. So commercial or financial credit note means what? In our credit note, there is no GST. So tell me, in this case, no GST credit note in this case. So what is the case here? In this case, should QRS claim ITC of 18 lakhs or should they reduce their ITC? What is your opinion? In this case, in our second case, can QRS claim ITC of 18 lakhs or should they reduce? If they can claim ITC of 18 lakhs, type 18 lakhs or else type reduce. What is your opinion? 18 lakhs or reduce? QRS, can they claim ITC of 18 lakhs or should they reduce? Perfect, 18 lakhs. Why? Because MyG did not reduce their output tax liability. Did they reduce their output tax liability? No. In that case, QRS can claim full ITC of 18 lakh. That's all exactly. So in financial or commercial credit note, output tax liability of the supplier has not been reduced. Therefore, the recipient need not reverse ITC. So, okay, what is the question? What is the clarification that they have given? It is clarified that the recipient will not be required to reverse the ITC attributable to financial or commercial credit note, as there is no reduction in the original transaction value and accordingly the corresponding tax liability would also not get reduced. Are we clear? Are we clear? Simple. Like it is very simple, right? This clarification is very simple. That's all. The point is very clear. And then what is the point? If supplier issues financial credit note to the recipient, supplier is not reducing his output liability. Therefore, recipient need not reduce his ITC. Question simple. How did we understand the supplier is not reducing his output tax liability? Because supplier has issued a financial credit note or commercial credit note. What is a financial credit note? What is a commercial credit note? Financial or commercial credit note means a credit note in which there is no GST. Credit note in which there is no GST adjustment. So it's simply a credit note without GST. Are we clear? Now we'll go to the second one. Can you tell me how this will work? First of all, supplier has issued a tax invoice. Second, supplier has issued a credit note. Here, this credit note contains GST. Yes, so that means supplier is going to pay tax only on the net value, 1 lakh minus 10,000, 90,000. So this is a GST credit note. In this case, how much did supplier pay to the government? Net 8,100 into 2, correct? Yes. How much can recipient also claim ITC? 8,100 into 2 means this 900 rupees. If he has claimed 9,000 rupees ITC earlier, he has to reduce this 900 rupees from that ITC. Now, same case, supplier is issued a financial credit note. 1 lakh rupees, tax invoice issued. 10,000 rupees, financial credit note issued. In this case, even if the value is 90,000, the tax invoice on that 1 lakh rupees, entire value, GST has been paid. So in this case, how much did supplier pay to the government? 18,000. How much can recipient claim as ITC? 18,000. He need not reduce this GST on 10,000 rupees. Clear or no? Are we clear? Are we clear? Yes or no? Yes. Okay. Now, regarding this, corresponding change has been made in our tax invoice credit note or debit note chapter. What is a change? Very, very simple. Supplier can issue a GST credit note only if the recipient reverses his ITC. Correct? Proportionate ITC only if he reverses, supplier can issue a GST credit note. So now the question was, what if the recipient is an unregistered person? Means what? Who can claim ITC? If supplier supplies something to the recipient, recipient can claim ITC only if he is a registered person. X supplies to Y. Y can claim ITC only if he is a registered person. Now the question was, what if Y is an unregistered person? X is later on issuing a credit note. In that case, can he issue a GST credit note? So here they said, if the recipient is B2C transaction, means unregistered person, recipient cannot reverse ITC, therefore supplier cannot issue GST credit note. What does it mean? Because they are assuming that the incidence of tax is already been passed on to the recipient. Means what? Let us take the example of MyG itself. Mr. X, CA student, is going to MyG to buy a mobile phone or tab. 1 lakh rupees plus 18% GST. 1,18,000 rupees Mr. X paid to MyG. MyG paid 18,000 rupees to government. Later on, MyG decided, after 1 month, MyG decided, power Mr. X student, we'll give him a discount of 10,000 rupees. What happened? MyG told Mr. X, MyG called Mr. X and told, please come to our shop. We will give you back that 10,000 rupees. So what happened? MyG gave 10,000 rupees back to Mr. X. So remember here, what is happening? 1 lakh rupees plus 18,000. Total 1,18,000 rupees student already paid. Yes, 10,000 rupees MyG is giving it back. Did they give back 10,000 rupees in a GST also? Because in that case, MyG should be giving back 11,800 rupees and not just 10,000 rupees. Here, MyG gave only 10,000 rupees. Means that 10,000 rupees on top of the 10,000 rupees GST is not being paid back to the recipient. So in this case, they said, you have already collected 18,000 rupees tax from the CA student. Means you are not forgoing or you are not giving back the tax to the student, means you cannot reduce this 10,000 rupees GST on that 10,000 rupees. You will have to pay GST on this entire 1 lakh. That's correct, no? See, if I'll give you two examples, okay? MyG raising a tax invoice, 1 lakh, 18,000 rupees GST, 1 lakh 18,000 collected. Next, issuing a credit note, 10,000, 1,800 GST, 11,800. So net effect, how much should MyG collect from the student? MyG collect from the student 1,18,000 minus 11,800. Correct, minus 11,800 means MyG has collected GST only on 90,000 rupees. Correct, 1,06,200. Correct. Now, what is MyG doing? MyG is raising an invoice for tax invoice for 1 lakh. GST already collected. Yes. Issuing a credit note only for 10,000 rupees. That means here 1 lakh plus 18,000 minus 10,000 rupees. MyG is not passing on the benefit of GST on 10,000 rupees to the student. So that means MyG is collecting 1,08,000 from the student. Did you understand the difference? 1,06,200 collecting them, 1,08,000 collecting them, difference 1,800. That 1,800 MyG cannot reduce from his GST liability because he has not passed on the benefit of GST to the student. That is why they said whenever the recipient is an unregistered person, it is usually assumed that the liability incidence of tax has been passed on to the recipient. Same provision, this is literally same provision we have learnt in payment of tax chapter. Incidence of, it is already always presumed that the incidence of tax has been passed on to the recipient unless until MyG, the supplier, proves that we have not passed on the incidence to the customer. Is it clear? Are we clear with this? Are we clear with this? Yes. Now we'll go to the last circular, okay, relating to value of supply. What does it say? We'll just combine and say these two circulars together. What does it say? Okay. So be very careful with this. There is a manufacturer. Okay. Manufacturer is selling, let us assume, mobile phone to a dealer. Let us assume Samsung is a manufacturer. He is selling mobile phone through Lulu Connect. Dealer to customers. Okay. Now, dealer decided to give a discount on this mobile phone. Dealer is saying, okay, we'll give you a discount. Shiriki mobile phone da vela is 1 lakh. Okay. Now we have an offer running, Vishu offer running. So you only have to pay us 90,000. 10,000 rupees is the discount. Now, Lulu Connect told Samsung that we are planning to give discount on your old models. Samsung said, okay, go ahead. You can give your discount. We will give you 5,000 rupees because now that you are giving discount of 10,000 rupees, we will give you 5,000 rupees. Now, the question was, now from dealer's point of view, he is collecting 9,000 rupees from the customer. He is getting discount of 5,000 rupees from the manufacturer. Means he is getting that money from the manufacturer. Now, the dealer's problem was, should he charge GST on 90,000 or should he charge GST on 95,000? Did you understand the question? Why 95,000? Because from customer he is getting 90,000, from manufacturer he is getting 5,000 rupees. So should he charge GST on 90,000 or 95,000? Now they said in the circular they have clarified that if there is an agreement between the manufacturer and the customer, note this point very clearly, okay? If there is an agreement between the manufacturer and the customer saying that we will give you a we will give you the sell this mobile phone for 90,000 rupees. That means the manufacturer is agreeing to give this mobile phone for 1 lakh rupees. Sorry, 90,000 rupees instead of 1 lakh rupees. In that case, the value of supply will be 95,000. Here, is there an agreement between the manufacturer and the customer? No, there is no agreement. Manufacturer has not told the dealer to give this discount of 10,000 rupees to the customer. Manufacturer doesn't even know who the customer is. So there is no agreement between the manufacturer and the customer. Therefore, the dealer will have to pay GST only on the value which is collected from the customer, which is 90,000 rupees. Wait, let me just complete this, okay? Okay, so what is the other situation? We'll take the example of an automobile dealer, okay? There is Maruti. Maruti is selling their cars through a dealer. Maruti, a dealer, they are selling their cars. So every year end to sell out their old model car, that is year wise on car manufacturing, the 2025 model, 2026 model. So when the model gets old, year back Maruti will tell, or all automobile manufacturers will give an advertisement that from tomorrow onwards, our Wagoner we'll be selling it for 9 lakh rupees. Till now, we were selling our Wagoner for 10 lakh rupees. From tomorrow onwards, or from this 1st January onwards, we are going to sell our Wagoner for 9 lakh rupees. You can go to whichever dealer you want. You will get this Wagoner for 9 lakh rupees. Now, what happens here? Here, Maruti is indirectly telling the customers that Maruti will give their Wagoner. From whichever dealer they buy, they are going to give their Wagoner for 9 lakh rupees. So that means there is an agreement between the manufacturer and the customer. So here what happened? Now, let's take an example. Okay, let's take an example. Evaluate matam. Let's take an example. What is the example? Shirikim, Maruti is selling their cars, Wagoner cars to the dealer for 8 lakh rupees. And dealer is adding their profit and selling the cars for 10 lakh rupees. Okay, 8 lakh plus GST. 10 lakh plus GST. Now Maruti is giving an advertisement that they are going to sell this car for 9 lakh rupees plus GST. So now dealer asked, we need a profit of 2 lakhs per car. Okay. If you tell us to supply it for 9 lakh, we are losing our profit. I'm taking all these examples only for ease. Okay. Nobody will make profit of 2 lakhs on sale of one car. We are only taking it for ease of understanding. Okay. So dealer is saying, how can we sell the car for 9 lakh rupees? We will end up making a loss because we at least need 2 lakh rupees margin to cover our expenses. If you ask us to sell at 9 lakh rupees, our profit will reduce to 1 lakh. So we will not have enough margin to pay our fixed expenses. So Maruti said, don't worry. You collect 9 lakh from the customer. You would have ideally collected 10 lakh rupees plus GST from the customer. Now you collect 9 lakh from the customer. Balance 1 lakh, we will pay it to you. Okay. So this amount is being paid as an inducement to the dealer to sell the car for 9 lakh rupees. Why? Because there is an agreement between the manufacturer and the customer. In this case, they said the dealer will have to pay GST on 9 lakh plus 1 lakh, which is 10 lakh. 10 lakh they have to pay GST. So let us understand the difference between these two provisions. The first provision says, if there is no agreement between the manufacturer and the customer, that discount will be given to the customer. In that case, the dealer will have to pay GST only on the amount collected from the customer. However, if there is an agreement between the manufacturer and the customer that the customer will get the product for 9 lakh rupees, in that case, whatever the manufacturer gives to the dealer, in addition to what the customer is giving, that value will also be added to value of supply in case of dealer. So just go through this. Okay, what is the point here? Is there an agreement between manufacturer and end customer regarding supply at a fixed discounted price? Agreement undo? No, there is no agreement. Therefore, whatever amount dealer is giving to the whatever amount manufacturer is giving to the dealer is not treated as consideration. That is, GST is payable only on the price charged to the customer. See, 90,000 rupees only on the price charged to the customer. Second case, okay, is there an agreement between the manufacturer and the end consumer? Yes, there is an agreement. In that case, GST is payable on how much our customer pays plus whatever manufacturer pays. On this entire amount, GST is applicable. Why? Because there is an agreement. Are we clear? Are we clear with this provision? Are we clear? Can I get a yes or no? If there is an agreement, yes, manufacturer customer, there is an agreement, then this amount should also be added. Okay. Is there an agreement between manufacturer and customer? No. In that case, value of supply is how much ever the customer pays to the dealer. Clear, Anna? Is it clear? Is it clear? Now we'll go to the final point. What is the final point? Supplier gives a post-sale discount of 50,000 to the customer. Sorry, to the recipient, means our dealer, okay? Manufacturer, dealer, customer. Supplier gives 50,000 rupees post-sale discount to dealer. This should be treated as discount and not consideration for additional services. Why? Because did dealer provide any service to manufacturer? No, simply he is giving discount. Simply, there is no agreement also. Simply is giving discount. It's only discount. Okay. Now, what happens if supplier is telling that if you do something, sales promotional activities you do, we will give you some amount, 1,50,000 rupees, we will give you as discount. In this case, even if it is called discount, is it actually discount? No, it is a consideration for the services provided by dealer to the manufacturer. In that case, it will be treated as a separate supply and will be liable for GST. But in this case, I told you, Samsung is there, Lulu Connect is there, customer is there. Okay. Now Samsung is telling Lulu Connect, you please display our advertisement, Samsung, at the entrance of Lulu Connect. At the entrance, you write Samsung and display it as our advertisement. For that, we will give you discount of 5,000 rupees. Here, even though Samsung calls it 5,000 rupees discount, is it actually discount? No, it is actually consideration for the services provided by Lulu Connect to Samsung, and GST will be applicable on 5,000 rupees. As a separate supply. You need not add it to 90,000 because this is one supply, this is another supply. Are we clear? So we'll just read through this. Whether a post-sale discount extended by manufacturer to the dealer can be treated as consideration in lieu of activities performed to promote the sale of goods. What did they say? The discount merely reduces the sale price of the goods and is not linked to any independent services. However, GST would be leviable in cases where dealer undertakes specific sales promotional activities such as advertising campaigns, etc. Only when such services are explicitly stated in the agreement, it will be treated as supply. In that case, GST would be charged. So if dealer is providing some, one second, miss, there is a doubt. Is dealer selling the car as agent of manufacturer or are they buying and selling car? They are buying and selling car. Usually dealers, the other arrangement is also there, but usually what happens is manufacturers supply car to dealer, dealer supply car to customer. So this is supply 1, this is supply 2. On this, GST is applicable. On this also, GST is applicable. Okay. So manufacturer is supplying car for 8 lakh plus GST. Dealer is supplying for 10 lakh plus GST. Okay. So that point is clear. Now what happened is year end. Okay. The car was not sold. For how much did manufacturer sell the car to the dealer? 8 lakh plus GST, right? Supply 1. Now manufacturer is giving an advertisement in the television that for our old models, we are going to sell that car for 9 lakh plus GST. Now, when a customer goes to dealer, dealer is forced to sell that car for 9 lakh. Because already it is advertised. There's an agreement between the manufacturer and the customer that this car will be sold for 9 lakh. Now dealer is asking, what will I do? So manufacturer told, you collect 9 lakh plus GST from the customer. We will give you 1 lakh plus GST. Your question is, so your problem is solved. 9 plus 1, you got 10 lakh. Okay, so for dealer, he will have to pay GST on 10 lakh. He will have to charge GST on 10 lakh, but he will be collecting it from two different people. That's all. Are we clear, Angel? Is your doubt clear? Angel, is your doubt clear? Yes. Okay. So that's all regarding discount also. So, okay, so that's all. We have covered our amendments. I'll just rush through, or I'll brush through all the amendments which we have covered. Okay. Supply chapter. What is the amendment? First amendment എന്താണ്? Voucher is equal to money. No GST. Voucher redeemed. So supply is happening, GST is applicable. Voucher expired. No supply. Supply did not happen. Therefore, GST is not applicable. This voucher expired, we call it breakage. Voucher expired, we call it breakage. Okay, that is our first amendment in our supply chapter. Second, supply chapter. Second amendment, what did we learn second? Charge of GST. What was the amendment? 9(5). Local delivery service was added. Local delivery services was added. Then, what did we learn in charge of GST? Next amendment. It's not an amendment. Delhi Development Authority is not government. Therefore, RCM will not apply. Okay. Next, what did we learn in charge of GST chapter? For GTA and renting of motor vehicle service, there was an option for 12% GST. That 12% GST rate has now been made 18% GST rate. Wherever you see 12%, make it 18%. That's all. That is our charge of GST amendment. Next, what did we learn? Exemptions. This is very important, okay? This exemptions also, two amendments are very important. What did we learn? Life insurance and health insurance services provided to individual and family is exempt from GST. Okay? In our exemption chapter, the next amendment we learned was GTA service, transportation of goods by road. Transportation of goods by road. There were certain exemption, but that exemption is not applicable to local delivery services supplied through e-commerce operator. Not applicable to local delivery services. Okay. Also, GTA does not include person supplying local delivery services. GTA definition also, it says GTA means a person who undertakes transportation of goods by road by issuing a consignment note, but does not include a person supplying local delivery services through an e-commerce operator. Okay, so that is our exemption chapter amendment. Next, value of supply chapter. Value of supply chapter, it's not an amendment, it's only a clarification. What does it say? Financial credit note. Financial credit note. Is there any GST implication? Output GST continues the same. There is no change. Output GST, no change. ITC also no change. Okay, next. Next, what did we learn in value of supply amendment? Next, what did we learn? Next, they said, if a person is giving discount to a dealer and dealer is giving discount to the customer, then they said, if there is an agreement between these two people, if there is an agreement and customer name they are collecting 1 lakh, from manufacturer he is collecting 5,000 rupees, then dealer will have to charge GST on 1 lakh 5,000 rupees. Then they said, manufacturer, dealer, customer. There is no agreement. Yes. From dealer, from customer, he is collecting 1 lakh. Manufacturer is simply giving a discount of 5,000 rupees. Is there an agreement between these two people? No, there is no agreement between these two people. Then in that case, dealer will charge GST only on 1 lakh. Are we clear? No agreement. In first case, there is agreement. In this case, there is no agreement. Are we clear? Are we clear? Yes. Okay. So that's all. We have covered all the amendments. In all the amendments taken together, as I said, amendments relating to 9(5) local delivery services. Second, amendment relating to life insurance and health insurance. Very, very important from exam point of view. Also, value of supply. Remember that financial credit note, if supplier issues, there is no GST implication either for the supplier or for the recipient. Supplier need not reduce his output tax liability. Recipient need not reduce his ITC because there is no GST itself in financial or commercial credit. So with that, we'll complete our today's session. I hope you're all doing well. Prepare well. Don't worry. GST is going to be an easy exam for you all, but that doesn't mean you will not revise GST. Keep on revising GST. Do maximum questions possible. Practice a lot of questions. You have to practice. Unless and until you practice on your own, you will not be able to write the exam properly. So instead of watching videos, watching others do questions, you have to do it yourself. Practice questions by your own. Only then you will be able to score well for your exam. Okay, so see you all. Good night then. All the best. Yeah, I will share this handwritten notes. I'm not sure whether you will be able to understand everything, but anyway, I'll share these notes in the group. I'll share these notes in the group. Okay. Thank you. Bye bye. Bye. See you all.
Thank you so much, ma'am. Thank you so much, ma'am, for today's wonderful written test. We truly appreciate taking time out of your busy schedule to guide us. Thank you all for joining us today. I wish you very best in your studies. Have a great evening ahead.